Hello students, my, my name is Krunal Patel and welcome to Sygentra's Rank Zone Classics. I am your mentor with respect to paper 1 of CA Foundation course, that is Principles and Practice of Accounting. We have started chapter 1 of paper 1, that is Theoritical Framework of Accounting. Today we are discuss with the interesting topic, that is accounting policies. Accounting policies refers to specific accounting principle and method. Specific accounting principle and method of applying this principle adopted by enterprise in the preparation as well as presentation of the financial statement. First of all, accounting policy refers to specific accounting principle and method. Then second is applying this principle and method adopted by the enterprise in the preparation and presentation of the financial statement. There is no single list of accounting policy which are applicable to all enterprise in all the circumstances. So no single list of policies, accounting policy which are applicable to all the enterprise in all the circumstances. So choice of accounting policy appropriate to the specific circumstances in which enterprise is operating calls for considerable judgment by the management. First of all, accounting policy refer to specific accounting principle and method. Second is applying these principles and methods adopted by the enterprise in the preparation and presentation of the financial statement. Second is there is no single list of accounting policy which are applicable to all the enterprise in all the circumstances. The choice of specific accounting policy appropriate to the specific circumstances in which the enterprise is operating calls for the considerate judgment by the management. So judgment of the management considered as a crucial part while making the choice of specific accounting policy which are appropriate to the specific circumstances. Now, different accounting policies. Friends, the area wherein the different accounting policy are frequently encountered can be given as follows: valuation of inventory and valuation of investment. For valuation of inventory, various accounting policies are frequently encountered, like we can use FIFO method for measurement of inventory. FIFO means first in, first out. We can also use weighted average cost method for valuation of inventory. So there are different accounting policy encountered with respect to valuation of inventory, like FIFO method or weighted average cost method. Second is valuation of investment. Like inventory, investment valuation has also considered different types of accounting policies. Like investment can be valued at market value or historical cost or its face value. So valuation of investment calls different accounting policy frequently. The list of accounting policy The list of accounting policies should not be taken as a exhaustive, but it is a only inclusive list of accounting policy. So no one can describe the single list of all the accounting policy for all the enterprises for all the situations. So while implementing different accounting policy, considerable judgment of management required to be taken at the time of framing and implementation of accounting policies. So till time we discuss accounting policy. Accounting policy refers to specific accounting principle and methods. These principles and methods are applied in the preparation and presentation of the financial statement. Next is, there is no single list of accounting policy which are applicable to all the enterprise in all the circumstances. Next is, choice of specific accounting policy appropriate to the specific circumstances in which the enterprise is operating calls for considerate judgment by the management. Then we see that the areas wherein the different accounting policy are frequently encountered, which are the area valuation of inventory and valuation of investment. The list of accounting policy should not be taken as exhaustive, but it is only an inclusive list of accounting policy. Next is selection of accounting policies. Choice of accounting policy. Choice of accounting policy is an important policy decision which affect choice of accounting policy affect the performance measurement as well as financial position of the entity. Choice of accounting policy is an important policy decision because it affects the performance measurement as well as financial position of the business entity. Accounting policy has been decided and chosen at the inception of the accounting period or the business operation. So it is an important or crucial decision at the time of choice of accounting policy, because once incorrect accounting policy has been selected, then it's heavily affect the performance as well as financial position of the business entity. Selection of inappropriate accounting policy lead to understatement or overstatement of the performance and the financial position. Lead to understatement or overstatement, the performance and the financial position. Selection of inappropriate accounting policy. So due to inappropriate accounting policy, financial statements show various understatement as well as overstatement financial facts or position of the enterprises. Thus, accounting policy should be selected. Accounting policy should be selected with due care after considering its effect on the financial performance of the business enterprise. So accounting policy should be wait a minute friends. Accounting policy should be selected with due care. With due care. Due care of after considering the effect on the financial performance of the business enterprises. Three major characteristics which should be considered for the purpose of selection of accounting policy, selection as well as application of accounting policy. First one is prudence, second one is substance over legal form, and third one is the materiality concept. All of three factors have been considered in detail at the time of discussing the accounting concept unit. So, three major characteristics which should be considered for the purpose of selection and application of accounting policies are prudence, substance over form, that is substance over legal form, and the materiality. The financial statement should be prepared on the basis of the accounting policy which exhibit true and fair view of the states of affairs of balance sheet and profit and loss account. Financial statement should be prepared on the basis of accounting policy which exhibit the true and fair view of the states of affairs of what? States of affairs of profit and loss account as well as balance sheet. Now, once accounting policy are implemented, certain change in accounting policy should be required only when the following conditions are met. Such change is required by some statute or for the compliance with an accounting standard, and such change would result in more appropriate presentation of the financial statement. More appropriate presentation of the financial statement. So, accounting policy or change in accounting policy should be made in the following condition. First is it is required by some statute or for the compliance with the accounting standard. The second is change would result in better or more appropriate presentation of the financial statement. So friends, till time we have discussed. First of all, we revise what we have discussed till the time. Firstly, friends, kindly pay attention because revision is the must. Revision is the only way to considerable wait a minute. Yes friends, revision is the must activity to crack the CA foundation examination. First chapter of CA foundation course of paper 1 requires some procedural aspect and theoretical part, but all the concept and fundamentals under chapter 1 are used in the practical implication of the all other chapters. So attention is required or attention is must at the time of studying chapter 1, because all the other chapters of paper 1 are purely depends on the concepts and fundamental study under the chapter 1. So friends, kindly pay attention. So what is accounting policy? Accounting policy refers to specific accounting principle and methods of applying this principle adopted by the enterprise in the preparation and presentation of the financial statement. Firstly, accounting policy refers to specific accounting principle and method. Second is applying these principle and methods in the preparation and presentation of the financial statement. Then there is no single list of accounting policy which are adopted and applicable to all the enterprises in all the circumstances. The choice of specific accounting policy calls for considerate judgment by the management. Then we discuss different accounting policy. The area wherein the different accounting policy are frequently encountered, which are the valuation of inventory and valuation of investment. The list of accounting policies should not be taken as exhaustive, but it's only an illustrative list of accounting policy. Then we have discussed selection of accounting policy. Choice of accounting policy is an important policy decision because it affects the performance measurement as well as financial position of the business entity. Selection of inappropriate accounting policy which may be lead to understatement or overstatement of the performance and financial position of the business entity. Therefore, accounting policy should be selected with due care. Accounting policy should be selected with due care after considering all its effect on the financial performance as well as financial position of the business enterprises. Three major characteristics which should have been considered for the purpose of selection and implementation or selection and application of the accounting policy: prudence, substance over form, and materiality. The financial statements should be prepared on the basis of such accounting policy which exhibit true and fair view of the states of affairs of the balance sheet and profit and loss account, that is financial statements. And change in accounting policy. Change in accounting policy should be made in the following situation or conditions satisfied. Such change is required by some statute or for the compliance with the accounting standard, or such change would result in more appropriate or better presentation of the financial statement. Then only change in accounting policy should be made. Now, we are considering the summary part which are given at the end of the unit in the ICI study material. Accounting policy refers to specific accounting principle. Refers to specific accounting principle and method for applying this principle adopted by the enterprise in the preparation and presentation of financial statement. Policies are based on various accounting concept, principle, and conventions. So we have already discussed this part at the time of accounting policies definition. Three major characteristics which should be considered for the purpose of selection and application of accounting policy. Which are they? Prudence, substance over legal form, and the materiality. These are also considered at the time of selection of accounting policies. Change in accounting policy should be made in the following condition. First is required by some statute or for the compliance with accounting standard. The second is change would result in more appropriate or better presentation of financial statement. These are also duly covered at the time of change in accounting policy aspect. So all of three aspects already covered up by our discussion on accounting policies. Now friends, we are consider some multiple choice question given by the ICI in the study material. First, change in accounting policy. A change in accounting policy is justified to comply with accounting standard and law to ensure more appropriate presentation of financial statement of enterprise, or option C is all of the above. So we already discussed the change in accounting policy aspect. Change in accounting policy only when two conditions are met. Such change required by the statute or with the comply with the accounting standard, and second is the change is required for more appropriate or better presentation of the financial statement. So correct answer is option C, all of the above two. Second, accounting policy for the inventory of Zeta Enterprise state that inventories are valued at cost determined on the weighted average cost basis or NRV, which accounting principle followed in adopting the accounting policy. Materiality concept, materiality covered some decision on the basis of the financial effect of the transaction. So here, considering the inventory valuation at lower of cost or net realizable value is based on the prudence accounting principle. So correct answer is option B. Next, the area wherein different accounting policy can be adopted are providing depreciation and valuation of inventory. For depreciation, we can adopt with different accounting policy like written down value method or straight line method, etc. And for valuation of inventory, we can be adopt any accounting policy which includes FIFO, that is first in first out, weighted average cost method, etc. So different accounting policy can be adopted for depreciation as well as inventory. So correct answer is both the option, that is for providing depreciation as well as valuation of inventory. Next, selection of inappropriate accounting policy. Inappropriate accounting policy may overstate the performance and the financial position of the entity, understate or overstate the performance and financial position of the entity, and last, overstate the performance of the business entity. We already discussed at the time of selection of accounting policy, where selection of an inappropriate accounting policy decision which may result in understate or overstate the performance and the financial position of the business entity. So correct answer is option B. Accounting policy refers to specific accounting principle and method of applying those principles. At the time of meaning of accounting policy, we have discussed accounting policies are specific accounting principles and methods, and these methods and principles applied in the preparation and presentation of the financial statement. So correct answer is option C. Accounting policy refers to specific accounting principle and method of applying those principles. So friends, today we have concluded one interesting aspect, that is accounting policy, under which we have taken up following aspect. Accounting policy refers to specific accounting principle and method of applying this principle in the preparation and presentation of financial statement. Next, there is no single list of accounting policy which are applicable to all enterprises in all the circumstances. So, choice of specific accounting policy requires or calls for considerate judgment by the top management. And different accounting policies are frequently encountered in the following cases: valuation of inventories, valuation of investments, and providing depreciation as well. This list of accounting policy should not be taken as exhaustive, but it is only illustrative list of accounting policies. Then we discuss selection of accounting policy. Choice of accounting policy is an important policy decision because it affects the performance as well as financial position of the business entity. 1. Selection of inappropriate accounting policy may lead to understatement or overstatement of the performance and the financial position of the business entities. Thus, accounting policy should be selected with due care after considering its effect on the financial performance of the enterprises. Selection of accounting policy, mark it as an important aspect. Then we see that major characteristics which should be considered for the purpose of selection and application of accounting policies: prudence, substance over form, and materiality. The financial statement should be prepared on the basis of accounting policy which exhibit or which provides true and fair view of the states of affairs of the financial statement, that is balance sheet and profit and loss account. Change in accounting policy should be made in the following situations: when it is required by some statute or for the compliance with the accounting standard, and such change would result in more appropriate or better presentation of the financial statements. And after we take the summary and multiple choice question given by the ICAI in the study material. I hope friends you are clear with the aspect or concept of accounting policies. Thank you friends.